This is the Asia Trade. I'm Shery in Seoul, where South Koreans are choosing a new president today.
And I'm Haidi, Stroud-Watts in Sydney. Our other top stories. A positive lead-in for Asian stocks as big tech sparks a late-day rebound on Wall Street, with Nvidia leading a rally in chip makers, bonds falling as the dollar hits 2023 lows. The White House says Presidents Trump and Xi are likely to speak this week as trade tensions threaten to boil over once more. And Ukraine and Russia hold a second round of direct peace talks after Kyiv's brazen drone strike on nuclear-capable bombers alarms officials in Moscow.
Heidi, I'm in Yeouido, Central Seoul, an area that's become very symbolic in this snap election. Lawmakers rushed to the National Assembly just behind me back in December when they were trying to hold an emergency vote to lift the martial law declared by the ousted former president Yonsei. One of those lawmakers that went viral, the front-runner Lee Jae-myung of the Democratic Party. His party headquarters are just a block away to my left. The rival PPP's headquarters also around here. Given how tense the situation has been leading up to the election, not surprising, we have police vans surrounding the National Assembly, surrounding those party headquarters. Police officers, almost 30,000 deployed around polling stations nationwide. And of course, Heidi, top of mind for voters today, the fragile economy, not to mention fighting President Trump's tariffs.
Both domestic and external pressures. And Shery, you can see from an external investor's point of view, if you take a look at the inflows that we're seeing when it comes to money that's going into Korean ETFs, it's really interesting. Clearly, this hope of a unified government, putting this chapter of political disruption behind the country, even if the result doesn't mean any sort of really serious economic reforms, that seems to be enough, because we're seeing investors putting $186 million into ETF funds that buy South Korean stocks in May. This was, in fact, the first inflows in a year ahead of that presidential election that Shery is in Seoul for us to cover today. So we'll be watching that very closely as our markets. But take a look at the setup elsewhere in Asia today. And of course, really that bounce back on account of the tech rally that we saw overnight. And that's going to sort of dominate a little bit of a recovery rally after yesterday's selling. Of course, these trade tensions continue to play out, but these hopes that perhaps a conversation between President Xi and Trump will take place to lower the temperature of what has really been a bit of tit for tat, and certainly some very strong words from Beijing accusing the US yesterday of violating the deals that were agreed in that conversation in Geneva, and really casting a lot of doubt over, the fragility of this trade détente and what it means for that ongoing trade relationship, the most important of which of all the negotiations, of course, that are sort of on the table with all these various trading partners. But take a look at what we're setting up with the Sydney stocks, looking like we'll actually see a little bit of modest upside there, just about 0.3% higher there. Chicago Nikkei futures looking pretty muted, but we did see that decline in the Japanese session previously on account of these trade tensions, on the doubling down of steel and aluminium tariffs as well. That played out when it comes to a lot of the steel makers in both Japan and Korea. The yen holding it at that 142 level as, of course, we continue to see that sustained weakness in the dollar. Take a look at how US futures are tracking at the moment, also how treasuries are looking at the moment as well, as we continue to watch particularly that longer end of the bond market and everything that sort of signals for risk appetite. Treasuries could just extend that slump as we continue to see that cloud over the trade and broader economic outlook, right? And watching oil as well, given the jump that we've seen. Another robust session for New York traded crude. The supply hike is sort of in play, but really it's these ongoing geopolitical concerns that investors seem to be more preoccupied with. Our executive editor for Asia Markets, Paul Dobson, joins us now for more. So there's a lot of to and fro when it comes to sentiment. Fragility is obviously key here. What's central to you in terms of the narrative that we're seeing, and potentially this conversation happening between the US and Chinese leaders?
Yeah, good morning, Heidi. That's a pretty good framing for investors waking up this morning and probably wondering what changed since we went home from Asia yesterday, where markets were looking pretty negative, and basically people were kind of discounting the idea that there would be this call between Trump and Xi this week. So the US seems pretty confident and adamant that it will happen. and that seems to have infused a little bit more confidence into trading of US markets, with some provisos, right? The dollar did stay weaker and bonds stayed lower, which were things that were handed off from the Asia session. So it was more about that equities turnaround and the tech driven rebound. So I wonder if there's some other stuff going on in the background there as well. Nonetheless, that's the thing that everybody wants to know about now. Will this conversation take place, and what will be the outcome of it? Would it be something concrete at the end of it? Now, I think it seems that the market's interpretation had been she would be unwilling to go into a call unless a lot of it were already set up, given the risk of disappointment or some sort of embarrassment, and nobody wants to put themselves into that situation and come out of it looking worse off. But it doesn't seem like there's a great deal of progress being made behind the scenes between US and China. The US seems to think that get the two leaders together is the best way to go about it. So if we do get confirmation that those talks are happening, I think that the market will see that as very optimistic. If we get more pushback from the Chinese side, then I think the market will probably take that as a negative.
And Paul, you mentioned the weakness of the U.S. dollar, and it seems Wall Street banks are expecting it to even be under more pressure in the coming weeks.
Yeah, absolutely. So in the coming weeks and months and over the next year, basically, Shery, I think that, some of the forecasts that have been coming in have been seeing this sort of long-term dollar downtrend now. Morgan Stanley, for example, looking for another 9 to 10% drop in the sort of broad dollar over the next 12 months. So it's not an immediate kind of smash down lower on the dollar, but more a kind of gradual and steady sort of weakening right across the board. And people are looking for that to play out because they're expecting money to come out of US stocks and treasuries and go into other markets all around the rest of the world. But we are getting close to some key levels in Asia's markets. For example, the yen getting closer to 140 again. We'll be paying attention to where the Chinese yuan goes with trading resuming again after the holiday. And other markets like the Singapore dollar close to some pretty important milestones as well. So that general dollar trend is starting to get to levels that we haven't seen in quite a long time. And as you said, sort of if you look at across the street, basically on Wall Street, a lot of the forecasters are predicting that we are going to see that kind of continual run, maybe not a straight line, but that continual run of weakness over time.
Bloomberg's Paul Dobson there in Singapore, just sort of trying to set the context of what we're seeing in these market dynamics at the moment. And certainly uncertainty over the impact of tariffs is also weighing on voters' minds in South Korea. And, Shery, we were talking about just the confluence of both domestic pressures as well as these external uncertainties. How big an issue is foreign policy? Does that shift depending on which candidate is successful?
Yeah, Heidi, you mentioned the uncertainty over tariffs, and of course, South Korea subject that 25% on all of its exports, temporarily dialed back to 10%. But the candidate Lee Jae-myung really emphasizing that in his 100 days in office, if elected, he would prioritize those conversations with the U.S. Still, what's interesting about this candidate, Lee, is that he's being a little bit more pragmatic when it comes to diplomacy. He wants a solid alliance with the United States, but he also wants to stabilize ties with China and Russia. And of course, balancing that relationship between China and the United States, especially when it comes to export controls on critical semiconductors, advanced technology that South Korea exports, that will be a very tricky balancing act. Also, of course, we have North Korea to contend with, which has become a crucial supplier of missiles and munitions for the war in Ukraine for Russia. And we have seen Lee Jae-myung wanting more dialogue with North Korea. His rival Kim Moon-soo of the conservative ruling party actually being more hardliner against Pyongyang. Kim actually wants to really prioritize the relationship with the U.S. and Japan. Key question is what will happen to relations with Japan, Heidi, because we have seen that historically the Democratic Party has had long grievances with Tokyo.
Well, Shery, speaking of China, the White House says President Trump is likely to speak this week with the Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring our China correspondent Min Min Lo, who joins us out of Hong Kong. And Min Min, it's not a guarantee, no date specifics have been announced from the US. We haven't even heard from China yet, and especially not since, a pretty fervent reply from the Ministry of Commerce accusing the US of breaking the agreement that was reached in Geneva.
That's right, Heidi. This morning I was just scanning Chinese media and I haven't seen a single article mentioning the prospect of a US-China call between President Trump and President Xi. So the discourse in China is very different from the focus of public discussions in the US right now. And it does seem like it is the US administration that is more keen in pushing for a call this week. President Trump saying that he will be able to settle many of these disputes and tension in a phone call. But of course, from the Chinese side, we know from tradition that they tend to favor having lower level officials negotiating key issues before culminating in a leader's call only when there are some expected outcomes that they are quite clear will be able to be achieved in a phone call. So at this moment, we have seen a ratcheting up of trade tensions, as you mentioned, very strong words from the Ministry of Commerce yesterday, a number of issues that China is really upset about, including the revoking of Chinese visas, the expansion of these chip curbs, as well as limiting the sale of critical parts in jet engines, for example. Reuters also reporting that the U.S. is preparing to step up military sale to Taiwan. Many of these issues, especially when it comes to Taiwan, is a red line for China. But for U.S., though, the main crux of the issue here is critical minerals. And a part of the Geneva Agreement is that China has committed to roll back some of these non-tariff countermeasures against the U.S. A part of it is about relaxing the flow of minerals back to the U.S. But this is an issue where you have Chinese exporters having to apply for export licenses from the Ministry of Commerce. And it's a sort of opaque process that sometimes there isn't a lot of visibility from the outside world. So it's possible for the Chinese government to sort of turn on and turn off the tap there without a lot of transparency. And so U.S. officials are saying they're not clear if this is intentional from the Chinese side or if it's a matter of administrative backlog.
So, I mean, what's the tariff situation right now between the two countries? Because, of course, they're pretty high. They've gone down. Could we see them actually go back up again if there's no resolution to right now the accusations from both sides?
Yes, so the current tariff agreement, the truce, is going to expire in early August. And it's really hard to say where this could go because there are so many of these sticking points that are not being addressed. Primarily the fact that, or the assessment from China that U.S. views China as this strategic rival that needs to be contained, especially on the tech front. China, of course, has been really leveraging on its dominance over rare earths, and that has already some impact on U.S. manufacturers. One of the car manufacturers, Ford, I believe, in Chicago, had to close one of its factories temporarily because of shortage of critical minerals. And so now it's a question of which economy can really withstand this standoff for the longer period. And it does seem like rare earths, some analysts say, has a more durable impact than tariffs, which will hurt both Chinese manufacturers and U.S. consumers. But China's lever over rare earths has a greater impact on the U.S. with not much cost to China. So we'll have to see where this goes when the two sides negotiate on the details.
Bloomberg's China correspondent Min Min Lo there in Hong Kong. Coming up on the Asia Trade, Yonsei University joins us for more on South Korea's election. We'll also be talking investment strategy with the Singapore-based SGMC Capital, plus discussing how Australia's education sector is aiming to capitalise on Trump's higher education crackdowns. Much more ahead on the Asia Trade. This is Bloomberg. Russia and Ukraine have laid the groundwork for a new prisoner exchange after a second round of direct talks in Istanbul. The hour-long meeting came with Kremlin officials said to be angry and alarmed over Ukraine's brazen drone strikes on Russian warplanes in Siberia. Bloomberg's Michael Heath joins us now for more, and we're still sort of processing, just not just how brazen, but how successful and efficient this operation was. And you've got to wonder how it's playing out across Russia, both in the leadership and perhaps, across the broader sort of propaganda machine.
Yeah. I mean, it's a fascinating one, and there's some great reporting on Bloomberg by one of our journalists who's spoken to Kremlin officials who, as you mentioned, were alarmed, discomforted. I mean, it's just hugely embarrassing for them. It dents Vladimir Putin's prestige. I mean, outside of many other reasons why he's managed to stay on in power for so long, was this sense that he does, that he is responsible for the security of the country. And, you have to remember, Russia hasn't been invaded since 1941. So while the Soviet Union, was still very, very strong in its defence, because of the chaos and the corruption and everything in Russia now, really what we're seeing is just how degraded its defences and air defences and these sort of things are. So, yeah, an amazing attack. Ukraine claimed it damaged 40 planes, which was always going to be an exaggeration. But we do seem to have some analysis that's 10 to 13 seems to be what they've done. But what's interesting is that these bombers, while they carry nuclear weapons or strategic weapons, and some of them are used in the campaign against Ukraine, they're also they're very reliant on Western components, which, because of the sanctions, they can't do anything much with that, in terms of replacing them. So it does hurt Russia, and it's not going to change the course of this war or anything like that. But for morale, for propaganda purposes, on all those fronts, it's a big win for Ukraine.
Given the situation right now, how feasible is it that they'll eventually get a breakthrough in this war, even with President Trump having played such a high-profile role in trying to mediate? It seems nothing has been done so far.
Yeah, that's exactly right, Shery. And I think what came out of yesterday was what we expected. I mean, look, it's really positive news that there's going to be prisoner swaps. What they're looking at there is really heavily wounded prisoners will be transferred, as well as young ones, men aged under 25. But the demands from the Russian side, at least, were absolutely maximalist. I mean, they're talking about Ukraine having these 4 territories that they've sort of said are now theirs, and they don't actually control completely militarily. They're demanding that Ukraine withdraw from the remainder of them and hand them over to Russia. Ukraine's never going to agree to that. And Ukraine, of course, is following sort of President Trump's lead, is calling for a ceasefire and proper negotiations. And the other things Russia wants is no more Western intelligence for Ukraine, basically for Ukraine to be cut off from the West. And for, again, this demand for presidential elections in Ukraine, because President Zelensky's terms run out, though, under martial law, which Ukraine is under at the moment because it's at war. No elections can be held. I mean, just sort of very, very, basically a negotiating position that's not a negotiating position, because it's impossible for Ukraine to really engage on this. So President Erdogan, who hosted the talks, the Turkish president, has suggested bringing together President Putin, President Zelensky and President Trump, which probably would be ideal. I mean, there needs to be some degree of mediation here to force them to do it, and face-to-face is the best way to do that. But until we see something like that, I think this is really going to drag on.
Bloomberg's Michael Heath there with the latest when it comes to those ceasefire negotiations. And Senate Republicans are looking into the potential impact of a so-called revenge tax buried in President Trump's fiscal package. The provision, which could discourage foreign investors, is worrying Wall Street. Let's bring our digital politics editor, Remy Vagis. Remy, so what are the main worries when it comes to this particular provision within the Trump tax bill?
As you called it, this is being called the revenge tax. It would levy higher taxes on people and companies who are coming from countries that the United States says are having discriminatory tax practices. And that would mean higher taxes on the income one receives from U.S. stocks and bonds. And Wall Street is saying, hold up, this would only provide a further disincentive for foreign investors to hold U.S. stocks and bonds.
So, Romy, we have already seen U.S. assets take a hit, given, of course, the uncertainty that global investors have on where the American economy and politics is headed. When it comes to foreign investors, what are we seeing in terms of their involvement in the U.S. economy? How large a part do they take, and are we seeing even that dwindling?
Foreign investors are huge, significant players in the U.S. financial markets. There are $31 trillion worth of assets, U.S. stocks and bonds that are held by foreign investors. And foreign investors hold about a third of U.S. treasuries. So Wall Street is concerned that if this provision ends up in the Senate version of this bill, this would mean weaker demand for U.S. assets, and that could even mean a weaker dollar. So Wall Street is really making sure that people are aware of this, that the senators are aware of this. We haven't seen impact yet from this, but some Wall Street analysts are saying that's because people don't even know that it's in this huge bill, and they want the Senate not to have this provision in its version of the bill.
Varghese there joining us from Sacramento. We have more ahead on the Asia trade. This is Bloomberg.
Welcome back. You're watching the Asia Trade. Take a look at some of the big political stories that we're following this hour. And Bloomberg has learned that the European Union has agreed to curb Chinese medical device manufacturers' access to public procurement contracts. Sources say the EU countries voted on Monday to ban Chinese firms' access to public contracts worth more than 5 billion euros. An EU inquiry found that Beijing discriminated against foreign firms in procuring its own supplies of medical devices. Polish Prime Minister Donald Tusk said that he would seek a vote of confidence to shore up support for his coalition government. That's after nationalist Karol Nawrocki defeated a centrist candidate backed by Tusk's party in the presidential election. Tusk says that he wants to re-establish unity in the cabinet, but has a plan in place if cooperation fails.
Ponad 20 milionów Polaków wybierało nowego.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
Take a look at how we're setting up when it comes to futures at the moment. This, of course, as Asian stocks are set for a boost after that rebound, particularly across the tech space. We are watching those chip makers after the move that we saw in NVIDIA overnight. But S&P futures at the moment looking pretty weak as we continue to kind of see this to and fro, just the weakness in sentiment as we get a little bit more optimism ahead of potentially a conversation between Xi and Trump. That's not been confirmed by really either side, but particularly nothing being heard about it from the Beijing side, especially after some pretty strong words yesterday from the Ministry of Commerce accusing the US of breaching the agreement reached in Geneva. White House saying that the leaders are likely to speak this week, so we continue to watch and see whether that sort of is actually scheduled. Nasdaq 100 futures also looking a little bit softer. We are watching the dollar in particular with the kind of resurgent return of the bears, with the dollar falling against all of its G10 peers, really extending those losses after we saw also weaker than expected US manufacturing data. Hedge funds in particular are really bolstering their short exposure for the dollar. This is Bloomberg. Take a look at how we're setting up as we head into the start of trading. A little bit of optimism there, really playing on that tailwind from the tech rally that we saw overnight, where we saw Wall Street traders kind of resuming that trading pattern of buying a dip, turning what was a pretty bad open for the S&P 500 into then a positive afternoon. US futures now are looking a little bit softer again, but that index managing to rise despite mostly negativity that we saw in breadth. The rebound in tech stocks will be watching in terms of that lead in Asia as well. Sydney stocks up by about 0.8% in the futures session. We do have the RBA minutes of those meetings to be focusing on there as well, looking like an early gain of just shy of 10% when we get into the start of cash trading in about an hour's time. Japan was one of the markets that was really sold off on the back of these tariff concerns, of course, the steel and aluminium tariffs, as well as the ongoing concern that perhaps this truce between the US and China may not hold. We could see that recovery depending on how sort of short-lived that is, given that we are getting some rhetoric from the White House that they're hopeful that the two leaders will be speaking later this week. We've heard nothing from Beijing on this, of course. Watching oil that continues to rally, which is quite interesting, despite that OPEC Plus move, which was widely expected in terms of the supply hike, but clearly it is the geopolitical concerns that are rising and dominating that part of the equation. Even with the some 400,000 barrels a day increase in July, there's a real split in terms of how many more hikes will come in the subsequent months. But we continue to watch some of these geopolitical factors like Ukraine's extraordinary strike on Russia's air bases, the Iranian criticism when it comes to a report on its uranium stockpiles, and the wildfires in Canada now at play as well, with the Alberta wildfires shutting about 7% of Canada's oil production. So we're watching that, and clearly some of those supply side concerns are at play there. Gold, they're seeing some upside again, holding gains along with the losses in dollar on the back of these trade concerns.
Right, and Haidi, no trading here in South Korea. Today is a public holiday. People are out and about, going to the polls. Of course, it's a presidential election only 60 days after the official ouster of former President Yonsei. Let's discuss all of the Korean politics, the drama surrounding this election. Joining me now is MJ Moon, the Underwood Distinguished Professor at Yonsei University's Department of Public Policy and Management. Professor, really great to have you with us outside here of the National Assembly. Thank you so much for coming out.
Thank you for having me.
I have to ask you, I mean, it's a public holiday, so thank you so much for coming out. Did you vote already? Are you voting today?
Well, I did last week. We had 2 days early voting days, so that I did, yes, last Friday.
That was super high turnout, the second highest on record.
That's right, about 35%, so that's the second highest in Korean history.
Does that give us sort of an indication of where this election could be headed?
Yeah, I think so. Well, that high turnout in early voting, I think that's that symbolized the sentiment and then the heightened public engagement in this election. So that I think that's a really big turnout, and I think that's maybe a signal to the positive signal to the Mr. Lee, Lee Jae-myung, Democratic Party.
Yeah, the front runner of the election so far, as we saw in last week's polls. But tell us a little bit about what we can expect from him, because if he's elected, the difference with this snap election is that he will not have a transition period to put everything in place before he gets into office.
Right. Yeah, this is snap presidential election, so that there will be no formal standardized transition period, so that he should take over the power as soon as the National Election Commission announced the election result, so that he should be ready for taking over the administration and ready for the making policies and also working through in the middle of very pressing domestic and international issues.
Yeah, that was my point, because if you have to work this fast, how soon can you put a working cabinet in place at a time when you're running out of time in order to negotiate with the United States on these 25% tariffs that have been temporarily lowered to 10%?
So that according to the law, all the ministers should be nominated by the prime minister, so that we don't have a prime minister right now. So that formality, he should wait until he has new prime minister. So that I think his cabinet, formality-wise, he will work with the current ministers. So that I think he has his own shadow cabinet already, and he has his own team already. But formality, he should work with the current ministers. But I think he will appoint the vice ministers in its ministries, so that they will play key roles in cabinet meetings, I think.
Depending on whether it's Lee Jae-myung or the ruling party's Kim Moon-soo or any other third-party candidate, What sort of policies could we see when it comes to dealing with the United States in these trade negotiations?
Well, I think that's one of the pressing issues, and Mr. Lee has been emphasizing the significance of the ally relationship with the U.S., but at the same time, he really wants to have very programmatic relationship with major players. Particularly, he wants to have a good relationship with China for national interest, and China is the largest trading partner. So he really tried to balance between military ally relationship and trading economic relationship with other countries.
And of course, the relationship with China will be tricky. The relationship with Japan could also change depending on if we see a change in government.
Well, geopolitics is really changing. That's a major issues, and I think they really try to maintain a positive trilateral relationship, U.S., Japan, Korea. At the same time, I think deal with the frosty relations with China. I think that's one of the major key foreign policy issues to Mr. Lee.
For voters, is it all about the economy? Is it about democracy?
Well, yeah, a lot of people really got frustrated with the economic downturns. And small, medium business owners really got frustrated. So that there's a really big demand from the people for economic stimulation. So that I think economic policy package by the new administration will be really critical. And I think that's one of the big things to the voters' mind today.
Right. Thank you so much for joining us today here outside of the National Assembly. It was really great speaking to you. And of course, this is MJ Moon Underwood, Distinguished Professor at Yonsei University's Department of Public Policy and Management. Of course, voters here in South Korea can get to the polls until 8 p.m. local time to cast their ballots. Now, it's really about what's happening in the global trade environment. We also heard from Korean Air Chairman and CEO Walter Cho saying that he expects global tariffs to cause confusion in the aviation sector, which is typically excluded from such levies. Cho also spoke to Bloomberg about why securing a trade deal needs to be the top priority for Korea's next president, as of course voters head to the polls today.
We've been without leadership for the last 5-6 months, and it's been troubling, especially with the economic situation globally. And now with new leadership coming up, I think that will be the priority for the government, Korean government. Yeah.
So getting a trade deal done, is that job number one?
Yes, I believe so.
And what do you want to see from that?
Regardless of the outcome, I just want it to be done, so we could see some future into and predictability.
So you'd rather the details are less important than knowing what the future is going to be.
So we could plan on what to do next.
Do you think the currency volatility is going to continue? The won's been pretty volatile over the last few weeks. Is that something that's affected you, and do you anticipate that continuing?
It's been stabilizing for a few weeks now.
So you'd be happy with a stronger won? That would be something that you would actually welcome?
Yes.
Do you think that will be part of the conversation with the United States?
But the Korean governments would, I think they would prefer a weaker won because it's an exporting country.
Yep.
But for me, I would prefer a stronger.
Okay. In terms of the trade deal, is it important to you though that we see aerospace being carved out? A lot of CEOs are telling me that
yes,
they would rather make sure that actually that aerospace goes back to its original format, which is no tariffs. How likely do you think that is?
Well, we're a large buyer of aircraft, but we also sell a lot of airplane parts to Boeing and Airbus as well. So this is very important for Korean Air as well. So, and historically, aviation was not part of the tariff, and now that it's going to cause a lot of confusion to the business. Yeah.
Are you already hearing that we're going to see price rises? Like I'm talking to, so the Boeing, Airbus, the big engine manufacturers, are they already starting to signal that price rises are coming?
Fortunately, we locked up all the prices before this happened, but I'm expecting some
spare parts and things like that could become more expensive.
Yeah, so that will be difficult to maintain and grow our business as well. Yeah.
What's happening with demand right now?
What?
Demand. What are you seeing in terms of?
So cargo, we've been seeing quite sharp decrease from traffic from China to U.S.
Right.
But and the passenger, it's been steady, especially in the premium market side. It's been steady, but we're expecting some turmoil depending on the trade negotiations.
The trade situation will also affect the passenger side of things. How exactly is that is it just in and out of the United States? Is it where are you seeing that?
Well, it's not just the United States, but it has a very big effect on the Korean economy, and that has a great effect on the passenger demands.
And you think, again, that's structural, that's a permanent feature of the landscape now?
Yes. So we'll have to adopt on that too, but there's too much to adopt right now.
There's too much volatility in too many parts of the business.
Yeah.
In terms, therefore, of going forward, how are you thinking about planning the network? How are you thinking about what you're doing with aircraft? Given the volatility you've described, can you make big orders right now? Do you have the degree of certainty you need to make big decisions?
We have demand for new aircrafts, not just for expansion, but also for replacement for more efficiency.
Yep.
And that's what we did in previous months with Boeing and Airbus. And we'll continue to do that. But for expansion and growth, there are still a lot of other markets that we are pursuing to grow and expand into.
Right.
Not just U.S., but other markets.
Okay, but you would take some capacity out of the U.S. and just put it elsewhere?
I think U.S. market is, I don't think we're going to pull out any of the capacity from U.S.
Korean Air Chairman Walter Cho there speaking exclusively to our colleague Guy Johnson. And subscribers can turn to the terminal for more on South Korea's elections. Our TLIV Go function is there for the latest updates, our commentary and analysis from our expert editors and analysts with that live blog. More ahead on the Asia trade. This is Bloomberg. Disney is laying off several hundred employees across its film and television businesses, and a sign that the entertainment industry's contraction is far from over. Bloomberg's Chris Palmieri joins us now for more. And Chris, what are we seeing in terms of the prioritisation of this restructuring, and clearly it reflects some of the weaknesses that we continue to see in the business?
Yeah, when Bob Iger returned to run the company in November 2022, he issued this cost-cutting program, and it's been over 8,000 jobs, some $7 billion plus in costs taken out of the business. But it just continues, and this sort of speaks to the weakness in the traditional TV business as people cancel cable TV in favor of streaming. And the movie business as well. It's, every now and then there's a really strong weekend, but it's still well below it was before the pandemic, and they've been cutting back on the number of pictures they do and the number of shows they do as they try to adjust to this new normal in entertainment. And so we're seeing that across other companies in the industry as well.
Is this sort of a signal of more pain potentially to come? And what does it tell us about, I guess, any change to broader strategy for Disney?
They reported really good earnings in the last quarter, and the stock jumped. Part of that was the theme park business and the streaming business growing in profitability. And so I think this is a sign that they just feel they need to keep cutting to keep delivering those surprise earnings as the old legacy media business declines.
Bloomberg's Chris Palmieri there with the latest on those cuts at Disney. And subscribers can watch us live and see our past interviews on our interactive TV function at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about. Become part of the conversation as well. You can send us instant messages. Do check it out. That is at TV Go. More ahead here on the Asia trade. This is Bloomberg. Take a look at some of the other major corporate stories that we're following. And Elon Musk is selling $5 billion in debt for his AI startup, XAI, the latest in a series of fundraising efforts across his business empire. Morgan Stanley is said to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in XAI stock through a secondary offering. Uber has named its longtime executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and the delivery businesses. The move is part of an executive shake-up at Uber, which includes the departure of a senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Take a look at how we're setting up. We're just about 10 minutes away from the start of cash trading here in Asia, as we are expecting to get some of that sort of boost from the take a rebound. Of course, we saw a pretty ugly start to the session in the overnight session in the US, but then that tech rally sort of drove US stocks higher ultimately. We are looking at gains when it comes to equity futures trading in Sydney, in Japan, and of course, when it comes to South Korea, we are seeing no trading today for election day activities. S&P futures, though, looking like they're playing that sort of fade at the moment. These ongoing twists and turns in the trade war, the US extending the exclusion of Section 301 tariffs on some Chinese goods until August 31st, pushing for that call between the leaders, between Xi and Trump. Beijing hasn't said much about that, but obviously issued that fairly stern commentary from the Ministry of Commerce yesterday, accusing the US of breaching the terms agreed during its Geneva talks. We're also looking at eco data today as well. Japanese debt market moves, in particular a sale on Tuesday, potentially ramping up pressure on the government to adjust borrowing plans and calm investor nerves, given how much activity we've seen on the long end of that market. Let's take a look at some of the stocks we're watching when trade opens in Australia and Japan shortly. And watching gold, which continues to gain. We see gold-related shares potentially seeing an advance in the early part of the session. Gold's price surging with geopolitical concerns, reviving demand for safer assets. You've also got the sustained weakness in the dollar at play there as well. One of the stocks we'll be watching in Japan will be shares of Toyota and also Toyota Industries as well. The car maker said that it would make a decision about a deal today. Bloomberg had reported back in April that the chairman, Toyota, had proposed a buyout of Toyota Industries. We are, of course, when it comes to South Korea, really watching the outcome of the election, which has come after what has been months of political disruption and uncertainty and volatility domestically, all at the same time when we're seeing a slowing economy, growing household debt, a lot of easing from the Bank of Korea, but of course also external pressures as well with the tariff threat really front and center when it comes to this economy, which of course is so externally vulnerable as well. We are starting to see, in terms of ETF flows, for the first time in a year, some significant flows into South Korean stocks. Well, global aviation executives are in New Delhi for the IATA AGM amid growing trade tensions and a drop in consumer confidence. We spoke with the IATA Director General, Willie Walsh, on how this ongoing tariff war is impacting the sector.
Tariffs certainly would make it more difficult. Historically, aircraft have been carved out from any tariffs. It's a tariff-free, effectively since 1979.
Not anymore.
So we have seen some tariffs being introduced. We would strongly encourage governments to, isolate aviation again from tariffs, because it's a global supply chain. It's not that you'll have sort of US manufacturing protected because of tariffs in the US and Europe separate. Again, it's completely global. The US manufactured aircraft rely on parts being made all over the world. I think when people look at the reality of this and what it would mean, if the US applies tariffs, it's going to impact on the US industry. It's going to impact on US manufacturing and aerospace, aviation. Aircraft engines has been a huge net positive for the US economy. Do
you think the manufacturer should take the hit, or do you think the airline should take the hit?
No. To be honest, I don't think we should see tariffs.
Right.
But the reality of tariffs being applied anywhere is ultimately people are going to have to look, is it possible for me to absorb some of this? It's no different to an increase in costs can I absorb some of this? Can I absorb all of it? Or how much of this am I going to have to pass on to consumers? And based on my experience of running a business, it's very difficult to absorb all of the cost increase that an industry faces, and ultimately consumers are going to pay more because tariffs no different to a tax or to an increase in cost. Consumers ultimately pay. That's the reality of it.
That was the IATA Director General Willie Walsh there speaking with Bloomberg's Guy Johnson, and Shery really keenly watching the outcome when it comes to the elections getting underway today in South Korea. Of course, there's no trading today as people go about and perform their democratic duty. And, you can see from that sort of investor reaction, right, there's a real hope that the turmoil of the past few months, of which you've covered on the ground, may well be behind this country.
Yeah, so that optimism has really led to that rally on the Kospi. We saw gains of 4% just last week. We saw the Korean won also gaining ground against the U.S. dollar. You said it, we don't have markets trading today, but that expectation that finally we're bringing an end to 6 months of political turmoil in this country has led to that outperformance in Korean assets. We're talking about breadth also widening across the board beyond only semiconductors. For example, when it comes to Samsung, the most valuable Korean stock, now accounting for about 16% of the Kospi's weight, down from over 20% a year ago. And of course, we have had candidates talk about improving corporate governance in this country, something that's very much needed in order to really turn the long-standing Korea discount into a Korea premium at a time when the economy also has stayed pretty fragile. Remember, we saw the Bank of Korea cutting rates last week, in fact, downgrading the growth forecast for this year already to 0.8% from 1.5% projected just in February. So we'll be watching how this election goes. The polls close at 8 p.m. tonight. We're probably going to get those results early in the morning on Wednesday. The market opens in Sydney and Tokyo are next. This is Bloomberg. Trade, we're counting down to Asia's major market open. South Korea closed as voters head to the polls to elect a new president, all really catalyzed by that martial law declaration by ousted President Yonsei. Remember, Haidi, lawmakers just struggled here at the National Assembly trying to get in and hold an emergency vote to lift that martial law declaration. Since then, protests have been ongoing. Could we finally see an end to that political turmoil?
The sheer amount of public anger and uprising, I remember it well. We were on the ground covering with you there in Seoul throughout that entire drama. And if you take a look at sort of the investor perspective, Shery, there certainly does seem to be a lot of optimism that even if neither candidate, whoever is successful today in this election, will bring about significant economic reform, there could at least be that period of calm. And we're seeing those flows when it comes to South Korean stock ETFs. We're seeing those flows into the Kospi. But take a look at what else we're watching as we get into just the start of cash trading here in Sydney and the start of trading when it comes to Japan as well. A bit of a turnaround from yesterday's sell-off, which was so much driven by these tariff uncertainties, right, both in terms of the hawkish words from Beijing, the Minister of Commerce in that statement accusing the US of breaching the terms agreed in its Geneva trade talks. But now we are hearing, at least from the US side, that they're pushing for a phone call between the two leaders, Trump and Xi, this week. We haven't heard any confirmation or details, least of all from the Beijing side, but we're watching out for that throughout the course of the day to see how much sort of longevity this amount of optimism or this bout of optimism can have. The Nikkei 225 up by just about 0.3%. We're seeing the top picks trading pretty flat at the moment. Dollar yen at 142. At one point we saw the dollar with the yen, I should say, gain over 1% in these trade tariff sort of concerns against the dollar. That picture of dollar weakness continues to be sustained. Also watching for a key bond sale when it comes to Japan today that could have ramifications in terms of how challenged JGBs will be. That 10-year auction will be testing investor appetite and amid these sort of ongoing concerns as yields for JGBs remain pretty elevated, 10 years around that 1.5%. That's well above that 25-year average of about 0.8%. So the question is going to be whether that level is going to be enough to draw strong demand, something we'll be watching very closely for. When it comes to Australia, we do have the minutes of the most recent RBA meeting where, of course, they cut. We also have the Deputy Governor, Sarah Hunter, speaking at an event later on today, watching for sort of any signals, given that the balance of possibilities for the RBA remains pretty open, as this is just another central bank that is not just grappling with domestic concerns and where inflation is, but also a great deal of uncertainty. That next RBA meeting coming just a day before the expiry of that trade truce between China and the US. But let's bring in, amidst all of this uncertainty, Max Bondurri, who's the founder and CEO at SGMC Capital. Max, great to have you with us. So we've kind of seen this pattern that plays out overnight, right, where it's a pretty bad open. There's some sort of reason to come in and buy the dip. We see a little bit more sort of enthusiasm going into the close of the session. Is this sort of tantamount to just trading water at this point until we get more certainty on trade? And what happens if we don't? Is this a pattern that remains?
Well, we're clearly seeing a lot of volatility, and investors want more visibility, and so it's normal that markets are actually going to be flip-flopping, if you want, and you're going to see actually even intraday swings. Therefore, could this be something that stays with us? Yes, it could. And of course, headlines are going to be hitting markets either which way, of course, the headlines come, whether they're positive or negative. So investors should expect that to continue. Now, whether it is always good to buy at the beginning of the trading day because it's going to close higher, obviously that is not always going to be the case. But basically what investors are looking for is a dip in order to buy, because we have actually seen that many investors may have felt left out by the recent strong rally that we've been seeing, and therefore they're looking for potential corrections in order to deploy the cash and liquidity that they have available, and that's exactly what we've been seeing even throughout the day and intraday, like you have correctly mentioned.
You like others, are expecting a depreciation story to continue when it comes to the dollar. And in fact, at the moment, we're seeing pretty close to that 2023 low. Below that, we'll fall to a 2022 low. What are the ramifications then when it comes to other asset classes if we continue to see, more or less a one-way trajectory for the greenback?
Well, first of all, let me say that we do expect the depreciation to continue, but probably not at the same pace that we have seen for the first 5 months of the year. So the greenback is likely to be on the back foot, but again, not at the same pace. And in terms of what that means, clearly, if you're looking at equities within emerging markets, that is going to be risk on for them, because a depreciation of the dollar is actually a good environment where to be, because they're clearly indebted in US dollars. And we've actually seen a number of these emerging markets, especially in the Latin America. I mean, look at Brazil, what it's done year to date. And those markets are likely to continue potentially experiencing some positive flows because of not only very cheap levels at which they had started the year, but again, this dollar depreciation story is likely to add fuel to the fire and therefore add risk onto the emerging markets. Of course, global investors need to be extremely selective because not all emerging markets are the same. But again, this is something that we expect to continue, and again, could be a very good trade also for the second half of the year.
Max, what about European markets? We have seen a lot of interest in, for example, German equities, given, of course, the increased spending that we're expecting from that market at a time when investors seem to be veering away from American assets.
Well, European assets have done great this year, and like you've mentioned, one of the main reasons is this change, which is a huge change with respect to Germany, increasing their fiscal package, their fiscal spending, and that has created a lot of exuberance. And these talks of a shared military, these talks of a more cohesive union are great for the European Union, and they're great also for the currency. We have seen euro strengthening quite remarkably this year, nearly 10%, even more than 10% against the dollar. Now, the question here is really how much of that is already priced in with respect to how reality is going to be. Because, again, it is a wonderful story, and, of course, it would probably for everyone if the European Union become more cohesive and more of a union. But whether that is already a lot of it priced in, and whether it's really going to be leading into something materially different from what we have seen over the past few years, that remains to be seen, and there's still quite a bit of skepticism out there. But what we believe is that the strong outperformance of Europe with respect to the US, especially this year, has been warranted so far, but we are not so convinced that it's going to keep going also in the second half of the year. Clearly, momentum is strong. Clearly, global investors were under-allocated to Europe, so they've actually been using this year to take their allocations up. But whether, again, this is a new change of structural story where Europe is going to be considerably outperforming the US in the future, we're very skeptical about that.
Max, markets closed here in South Korea, where I am today, because of the presidential elections. But there's been a lot of optimism about corporate governance reforms from whoever wins the presidency. Something perhaps similar to what we've seen in Japan and the optimism there. What are your expectations?
Well, clearly South Korea expects and hopes to put this chapter behind them. And global investors just are looking for more clarity going forward. And that's why you've seen a lot of optimism going into the elections. That's why you've seen a strong rally up to now. And we think that could continue. So once again, as long as you get an environment where investors know what to expect, where the business environment is more stable, where the political environment is hopefully more stable, and is going to be looking at longer data, longer term kind of policies and clear indications and directions, that is all clearly positive. And keep in mind that we're coming from a pretty chaotic few months last year and the beginning of this year. Therefore, anything from here which adds a little bit of direction is going to be cheered by the markets, and that's exactly what we have been seeing in the equities.
Max Bondurri, CEO at SGMC Capital. Really good to have you with us on a day like today, of course, as we await the results of the polls. Haidi, South Koreans headed to the voting stations today until 8 p.m. tonight. The expectation now is that we might get those results early in the Wednesday morning here in Seoul, given that last time when we had voters head to the polls in 2022 for Yoon Suk-yeol, we saw the election results around 4 a.m. and that was because of a very tight margin with the runner-up, who was Lee Jae-myung, now the front-runner candidate for this round of elections in the 21st presidential vote. But of course, a lot of things top of mind for voters here, especially when it comes, Heidi, to the economy and the fragile state of course, trade relations with the U.S. as well.
It's really interesting, and I'm curious in terms of what the broader sort of environment or the mindset is amongst voters in South Korea at the moment. We've seen in other economies, noticeably, of course, Canada with Mark Carney's victory there, but also in places like Australia, where there's been a really firm rejection of any candidate seen as being sort of conservative in that Trump style. Do you think in this election it's really more sort of the internal economic issues, the political turmoil that's weighing on voters, or are they going to be motivated by how this next leader deals with the White House too?
It's really interesting to see what the electorate here in South Korea is thinking about, because, of course, the way that this snap election took place is very out of the ordinary. And the key point remains that Yoon Suk-yeol was of the ruling party right now. So there might be some people who think that that's actually going to cost the ruling party the election. A bulk of voters might not be happy with what the martial law declaration, which led to 6 months of political turmoil in South Korea, has done to the South Korean economy. Remember, the Bank of Korea just downgraded the forecast for growth for this country for this year to 0.8% from more than 1% just in February. The BOK had to cut rates again last week. We have seen exports already slowing. You alluded to, of course, the trade tensions, the tariffs of 25% coming from the Trump administration that have been dialed back temporarily to 10%. But how these leaders, these candidates, and the next presidential incoming president actually deals with that will be key in this election. But a lot of the policies seem to be pretty similar as well when it comes to dealing with the economy. We're talking about a supplementary budget. We're talking about potentially a fund, 100 trillion won worth of capital in order to help the AI sector here in South Korea. All of the candidates want to shore up the economy.
I remember from, the different sort of factions in the protests that you covered that the former President Yoon had his own supporters. Do we know where he is now in terms of, does he have any influence? Do we still see that division within the electorate?
It's been a very interesting phenomenon to see here in South Korea that the protesters of ousted President Yoon Suk-yeol have come out in force in the past few months. We're talking about President Yoon still ousted officially in April when the Constitutional Court upheld the impeachment. But right now we know that he is facing trial for an insurrection charge. He's also been indicted for abuse of power. Remember, he was the first sitting South Korean president to actually be arrested, then released on a technicality. The deep political divisions in the country continue after the martial law declaration. We've had 3 acting presidents in the past 6 turbulent months since the martial law was declared back in early December. Yoon supporters have grown larger over the months, as I mentioned, but still, given, of course, the fragile state of the economy, that will be really a key point that voters will be thinking of as they head to the polls until 8 p.m. local time today. The economy, not to mention perhaps also what it means for the state of democracy in this country.
Subscribers, of course, can turn to the terminal for more on the South Korean election and the results as they start to come in a little bit later on today. TLIV Go is your function for those latest updates, our commentary and analysis from our expert team as well. More ahead on the Asia trade. This is Bloomberg. The White House says President Trump is likely to speak this week with the Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. So we'll see you guys later. Thank you.
Let's bring our China correspondent Min Lo in Hong Kong. Have we heard anything from the Chinese side on this?
Not yet, but oftentimes when it comes to these high-level talks, it's quite common sometimes for the Chinese side to release any information at the very last minute, as late as the day before. So it's hard to tell. We still have a couple more days before the end of this week. We'll see if this call actually happened. But so far, I haven't seen any article on Chinese state media, for example, discussing the prospect of talks, and it does seem like it is the U.S. that is more keen on having this call sometime this week. Of course, there are many things for China to be unhappy about what U.S. has done so far, including the revoking of Chinese student visas, expansion of chip curbs, curbing the sale of chip design software to China, and also critical parts made for jet engines, for example. And there was a Shangri-La dialogue over the weekend where the U.S. really played up the Chinese threat among all the other foreign dignitaries and foreign ministry defense officials that were gathered in Singapore. That was something that China was very upset about, especially when it comes to Taiwan, warning the U.S. not to play with fire there. And meanwhile, the U.S. is not happy about the slow pace of the flow of critical minerals into the U.S. There was a commitment by China at the Geneva deal. They agreed that they will be rolling back some of these countermeasures, non-tariff countermeasures against the U.S. But the U.S. says the flow of critical minerals have been slow. They're not sure if that is intentional or if it is just a matter of administrative backlog that is going on here. So President Trump said he's confident he will be able to clear up all of these tension in a call with President Xi. But right now, we're not getting any signal that President Xi is open to even pick up the phone.
Bloomberg's China correspondent Min Lo there in Hong Kong. Let's take a look at some of the other political stories that we're following this hour. And Bloomberg has learned that the European Union has agreed to curb Chinese medical device manufacturers' access to public procurement contracts. Sources say EU countries voted Monday to ban Chinese firms' access to public contracts worth more than €5 billion. An EU inquiry found that Beijing discriminated against foreign firms in procuring its own supplies of medical devices. Polish Prime Minister Donald Tusk says he'll seek a vote of confidence to shore up support for his coalition government. That's after nationalist Karol Nawrocki defeated a centrist candidate backed by Tusk's party in the presidential election. Tusk says he wants to re-establish unity in the cabinet, but has a plan in place if cooperation fails.
Ponad 20 milionów Polaków wybierało nowego...
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
More ahead on the Asia trade, this is Bloomberg.
There's no question in the short term with what we've seen coming out of Washington and the political challenges of the trade negotiations. It's choppy.
We think we've got about a $500 million residual cost challenge as a result of those tariffs.
Since tariffs were announced on the 2nd of April and until the state of execution on April the 9th, we have seen some softening.
Things are steady. As we've been saying publicly for quite a while now, and we're reassured that our premium demand is holding.
And some of these events that we're seeing at the moment are short-term in nature. And therefore, they're not going to have a long-term impact.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be.
Aviation industry executives speaking at the International Air Transport Association's AGM in New Delhi on the impact of US tariffs. Well, Korean Air Chairman and CEO Walter Cho says that he expects global tariffs to cause confusion in the aviation sector, which is typically excluded from such levies. He also spoke to Bloomberg about why securing a trade deal needs to be the top priority for Korea's next president as voters head to the polls.
We've been without leadership for the last 5-6 months, and it's been troubling, especially with the economic situation globally. And now with new leadership coming up, I think that will be the priority for the government, Korean government. Yeah.
So getting a trade deal done, is that job number one?
Yes, I believe so.
And what do you want to see from that?
Regardless of the outcome, I just want it to be done, so we could see some future into and predictability.
So you'd rather the details are less important than knowing what the future is going to be.
So we could plan on what to do next.
Do you think the currency volatility is going to continue? The won's been pretty volatile over the last few weeks. Is that something that's affected you, and do you anticipate that continuing?
It's been stabilizing for a few weeks now.
So you'd be happy with a stronger won? That would be something that you would actually welcome?
Yes.
Do you think that will be part of the conversation with the United States?
But the Korean governments would, I think they would prefer a weaker one because it's an exporting country.
Yep.
But for me, I would prefer a stronger.
Okay. In terms of the trade deal, is it important to you though that we see aerospace being carved out? A lot of CEOs are telling me that they would rather make sure that actually that aerospace goes back to its original format, which is no tariffs. How likely do you think that is?
Well, we're a large buyer of aircraft, but we also sell a lot of airplane parts to Boeing and Airbus as well. So this is very important for Korean Air as well. So, and historically, aviation was not part of the tariff, and now that it's going to cause a lot of confusion to the business. Yeah.
Are you already hearing that we're going to see price rises? Like I'm talking to, so the Boeing, Airbus, the big engine manufacturers, are they already starting to signal that price rises are coming?
Fortunately, we locked up all the prices before this happened, but I'm expecting some
spare parts and things like that could become more expensive.
Yeah, so that will be difficult to maintain and grow our business as well. Yeah.
What's happening with demand right now?
What?
Demand. What are you seeing in terms of?
So cargo, we've been seeing quite sharp decrease from on traffic from China to U.S.
Right.
But and the passenger, it's been steady, especially in the premium market side. It's been steady, but we're expecting some turmoil in depending on the trade negotiations.
The trade situation will also affect the passenger side of things. How exactly is that Is it just in and out of the United States? Is it? Where are you seeing that?
Well, it's not just the United States, but it has a very big effect on the Korean economy, and that has a great effect on the passenger demands.
And you think, again, that's structural, that's a permanent feature of the landscape now?
Yes. So we'll have to adopt on that too, but there's too much to adopt right now.
There's too much volatility in too many parts of the business.
Yeah.
In terms, therefore, of going forward, how are you thinking about planning the network? How are you thinking about what you're doing with aircraft? Given the volatility you've described, can you make big orders right now? Do you have the degree of certainty you need to make big decisions?
We have demand for new aircrafts, not just for expansion, but also for replacement for more efficiency.
Yep.
And that's what we did in previous months with Boeing and Airbus. And we'll continue to do that. But for expansion and growth, there are still a lot of other markets that we are pursuing to grow and expand into.
Right.
Not just U.S., but other markets.
Okay, but you would take some capacity out of the U.S. and just put it elsewhere?
I think U.S. market is, I don't think we're going to pull out any of the capacity from U.S.
Korean Air Chairman Walter Cho there, speaking exclusively to our colleague Guy Johnson. We are watching gold shares in this session, given that we continue to see upside when it comes to gold prices, some downside, of course, continuing when it comes to the US dollar as well. Some of those gold companies, particularly here trading in Sydney, seeing upside as well as in the Japanese session. Also watching Toyota, we're expecting perhaps an announcement to come on that decision today. Take a look at how we're faring across Asian benchmarks. We're just about half an hour into the start of cash trading here in Australia and Japan. Korea, of course, closed on account of election day activities today. We are seeing some tepid upside, I would say. Let's characterise it as that. The Nikkei 225 up by just about 0.25%, following a bit when it comes to the rebound in the Wall Street session in big tech names, ultimately driving US stocks higher. The regional stock index really swinging at the moment, though, between small gains and a few losses. Kiwi stocks also to the upside. We're seeing probably the strongest gains coming through from Australia, where we are seeing that continued, if perhaps not so convincing, rally across oil, driving the energy sector higher by about 1.5%. Materials, industrials also leading the gains here in Sydney. Well, Beijing's trade tensions with Washington remain front and centre for investors. Mainland Chinese markets reopen in the next hour after a holiday. Our senior Asia equities reporter Abhishek Vishnu joins us now. So just so much uncertainty. The White House seems to think that a leadership phone call will happen this week. We've heard nothing from Beijing since what was, quite a bit of ire being expressed in the Ministry of Commerce statement yesterday. What sort of narrative do you think will drive that market reopen?
Well, if you look at the market reopen, HSCI actually closed 1% lower yesterday after falling 3%. We saw Nasdaq Golden Dragon Index rising by 0.5 percentage point. So net, it's most likely setting up to be a weakish open in the context of those trade tensions that are rising again. Like you said and pointed out, most of the reporting or the positive reporting in this regard, that there would be some kind of talks that can happen between US and China at the leadership level. All that reporting has largely come in from White House and sources around that. China has been largely mum on this subject, and both sides have accused each other for the last 2 days of walking back on the terms of trade truce that they had agreed to in Geneva. So the setup looks largely weakish, And if you look at CSI, it's in line with how CSI has been performing over the last 2 months. It's largely, a grinding trend channel, and it might continue today as well. Just a slower grind downwards. What we need to see for CSI to break up and chase gains in net shares or close some of the recent gaps with net shares is a softening of trade tensions, as well as China going out and committing a big stimulus. So from those two aspects, it will be a slower grind downward. And everybody in the market is just keen to know what comes out in terms of reporting from China's side. How are they looking to close the gap and talk to US on trade tensions?
Abhishek, we saw those trade tensions actually hit Chinese electric vehicle makers trading in Hong Kong this week. We do get NIO earnings today. What are we expecting?
That's right. I mean, the tensions have hit that sector, but more than that, it's a story about price wars. Now, NIO is somewhat of a smaller player in the sector. We've got XPeng, which probably is 3 times of its size and has come out with earnings, which in fact were better than expected. And the stock of XPeng had risen, I think, about 14-15% on that day after that surprise. So, in context of NIO, while deliveries for first quarter had missed estimates, even after a 15% growth, given how XPeng has delivered, there are some expectations that maybe NIO would also deliver better than expected number. But the buy side or investors are largely focusing on getting answer to few questions. First, the quantum of price cuts amid this price war in the sector. Second, what kind of inventory companies managing, and third, what kind of order intake momentum is EV as a sector showing. If NIO comes in, and meets the estimates or beats the estimate, it will just further the recovery that we have seen in the sector. But again, if it comes out and says something positive in the context of price wars, I think that can change. That can possibly add a lot more momentum to these stocks.
Bloomberg's Abhishek Vishnoy there joining us from Singapore. Also, executives of Hong Kong-based developer New World are said to be growing concerned about prospects for a $2.6 billion mega shopping mall project near the city's airport. The firm is already struggling to navigate a cash crunch. Bloomberg reporter Shery joins us there in Hong Kong. And Shery, the backdrop for Hong Kong, the city itself, is not too great. But what exactly are the concerns from the executives?
Right. So New World's executives are really concerned about the project, mainly in 3 aspects. One is that although New World said it has already leased about 40% of the airport mall to tenants, many tenants are concerned about, a lack of visitors if they move in too early. So a lot of tenants are hesitant to move in or even start preparation works to move into the mega mall at the Hong Kong International Airport. So although the mall hasn't officially opened today, if you go to the mall and its vicinity, you will see that very few visitors are around because the main facilities around the mall hasn't been ready yet. So that's one of the concerns. And second, Hong Kong is planning to launch a new airport terminal in phases starting from September. And this terminal is going to be adjacent to the mall. And it's supposed to bring in some foot traffic to the mall, but we learned from sources that the airport authority has been struggling to persuade a lot of airlines to move some flights into the second terminal. The airlines' concerns are that, Hong Kong demand for flying in Hong Kong hasn't been where it used to be. So there is little demand to move into the second terminal. And also the second terminal is a bit too far away from the main facility of the airport. So they're seeing kind of dim outlook for the second terminal. And 3 is that Hong Kong's economy really hasn't returned to where it used to be before COVID. And retail is suffering. Aviation data remains low. So the outlook of Hong Kong's economy is kind of weak, and that's putting more concerns on the executives for both New World and Hong Kong's airport authority.
How important is 11 Skies to New World?
Well, the mall measures about 3.8 million square feet, and it accounts for about a quarter of the total square footage of New World's major investment properties in Hong Kong. So because of its sheer size, the success of the mall can really provide stable and recurrent liquidity to ease New World's cash crunch right now. We know that New World is facing increasing debt pressure today, and it's already delayed payment of interest for some bonds, and it's also seeking urgent refinancing from banks. And it's pledged some of its most prized assets for that refinancing. So the mall is really key to provide an important cash flow for New World to ease its financial troubles. If it's not returning as much as it's expected, it may deepen the financial woes at New World.
Bloomberg Shirley Zhao in Hong Kong. Coming up next, the Australian Academy of Science joins us to discuss how Australia's education sector is aiming to capitalise on President Trump's higher education crackdowns. This is Bloomberg. Well, the Trump administration has been revoking visas for foreign students in its latest crackdown on US academia targeting Ivy League schools. This could spark an opportunity for countries like Australia in terms of absorbing talent and increasing in its expenditure on R&D efforts. The Australian Academy of Science opened up its Global Talent Program in April and says Australia has an unparalleled opportunity to attract the smartest minds leaving the United States. For more, let's bring Academy President Chennupati Jagadish. Really great to have you with us today. We appreciate your time, and in fact, you're joining us today from Beijing. Tell us about what efforts are currently underway. Of course, we have a renewed mandate for the Australian government. Can you tell us in terms of what perhaps universities, academia, and as well as what the government might be doing in terms of really taking advantage of this moment in US policy?
Oh, thanks, Heidi, for having me. And so basically, the Australian Academy of Science has launched a program called Global Talent Attraction Program. And purpose of the program is to really attract top talent to Australia. As you know, that the talent really makes a big difference in terms of our research and development and also our education programs. The Academy is working with the government and philanthropic sector and then the universities and medical research institutes and other research institutes to identify the opportunities to attract talented people to Australia.
I know that you're in Beijing working alongside the Chinese Academy of Sciences, and I do wonder, we know anecdotally, as well as from the data, that Chinese students face a great deal of uncertainty when it comes to whether they can still study in the United States. We know that visas being revoked, background checks, affiliation to party and such are being conducted. Do you think there should be a special focus when it comes to taking, some of the best and brightest when it comes to Chinese academics and students and bringing them to Australia?
So the international students, Haidi, play an important role in terms of research and development in Australia and in every country. And it is very important to attract those people to Australia because they contribute not only to research, strengthen our research, and to just give you an example of my own research, and many students from international countries have been participating in our research. Without them, my own research will be very weaker. So that is why it is important to really attract talent from everywhere in the world. And again, there are many areas we can work with China, for example. So this week today we're having a workshop between Australian Academy of Science and then the Chinese Academy of Sciences in the area of environmental protection and biodiversity laws. So really, these are the areas which are of common interest. And we only got one planet, and we all have to make an effort to look after it. So there are more common things than differences. So that's why we really need to make sure that identify the areas we can work together and attract the talent to Australia to strengthen our own research and also contribute to the global knowledge base as well.
There's also huge integrated relationships when it comes to reliance on US research and development and data, right? Be it you're talking about vaccine development or climate or defence and strategy. Do you worry that there's too much reliance, and how complicated will it be for sort of Australia to extricate from that and somehow diversify in terms of where it can get that data and intelligence from?
So US is one of our strongest research partners, and we should continue to engage with US. And while we are doing this one, we also really expand our collaborative linkages with Europe and other friendly countries. So thereby we'll be able to strengthen our research and also make sure that the science is globally stays strong, because geopolitics can change, but the expertise be lost to the science sector will be lost forever. So that is why all the countries globally need to work together and also strengthen that research as well. And that is why the Australian Academy of Sciences Global Talent Attraction Program has been created to ensure the leading experts in various areas can find opportunities to come and work in Australia. As you know that the many countries have created similar programs, it is very important for all of us to lift our game so that collectively we can continue to make sure that our science stays strong, because science has an important role to play to address the global challenges, as you pointed out, like climate change and in terms of pandemics and health security, and then the food security, energy security, and all these things require all of us to work together. And I think it's important for us to make sure that we continue to work together and strengthen our research in all of our countries.
Professor, are you seeing policy cues from the government happening right now when it comes to taking advantage of the US brain drain? Or I suppose, what sort of policies would you be encouraging the Albanese government to put in place to try and take advantage of this?
So the Australian government, of course, the government has just been re-elected, and then the new ministers also are settling down in their roles. And we are encouraging the government to really create a comprehensive program to enhance the R&D investment in Australia, and also make use of this opportunity to attract the top talent to Australia. And that both are very important, including really streamlining the visa processing so that it becomes easier for people to come to Australia. Australia has a lot to offer in terms of excellence institutions and excellent research infrastructure, and an outstanding quality of life as well. So that this combination is very difficult to beat. That's why the government will need to act on it now in order to make use of this opportunity to attract the top talent to Australia.
There's a lot of debate when it comes to dwindling productivity, dwindling innovation in Australia. How important do you think policies like this would be in terms of being able to fast-track the ability for not just Australia's research and development and scientific communities, but also the broader economy to be able to be better future-proofed?
The investment in research and development really has an important role to play in terms of productivity, enhanced economic activity, and also diversify our industry sectors. We need to move from the fossil fuel-based economy to knowledge-based economy. So that is why investments in R&D is absolutely critical for us to be able to strengthen our economy and also enhance the productivity, create jobs which are really the future jobs. For example, when you're talking about artificial intelligence or quantum technologies, or my own area of nanotechnology, and biotechnologies and health technologies. And then they will be relying on the STEM skilled people, science, technology, engineering, and mathematics skilled people. So that is why our government should be really investing and also enhancing the investment from the business sector as well. As you know, Haidi, that government has launched last year strategic examination of the research and development. And that committee is really talking to the sector. And then hopefully those recommendations will be accepted by the government and also will really invest in R&D for the future of our country.
Professor, really great to have you with us, and we appreciate your time. Professor Chennupati Jagadish, who's Australian Academy of Science President. We'll have much more when it comes to Australia Ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. if you're viewing out of Hong Kong. Plus, you continue into the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. This is Bloomberg. Let's take a look at some of the big corporate stories that we're following this hour. And Elon Musk is selling $5 billion in debt for his AI startup, XAI. It's the latest in a series of fundraising efforts across his business empire. Morgan Stanley is said to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in XAI stock through a secondary offering. Uber has named long-time executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and delivery businesses. The move is part of an executive shake-up at Uber, which includes the departure of the senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Disney is laying off several hundred employees across its film and TV businesses in a sign that the entertainment industry's contraction is far from over. The company says staff reductions began on Monday. Disney has eliminated over 8,000 jobs in recent years as it works to cut expenses by $7.5 billion, Shery.
Right, Haidi, the CEO of video streaming company Starz says he sees growing opportunities as the platform continues to roll out new content. Jeffrey Hirsch spoke to Bloomberg about the firm's business strategy after parting ways with media giant Lionsgate.
We think that the portfolio of content really makes us a very compelling service at our $11 price point. And you saw that in the first quarter numbers. We actually grew the U.S. subscriber base total by almost 2% in the first quarter, which is a really good accomplishment in a very competitive space. But we have a programming group. We've got 40 to 50 shows in development at any given time. And as we talked about on the call, we want to go from a 15% profit margin to a 20% profit margin by end of 2028. One of the ways that we get there is actually by turning the slate over and putting new shows on the air that we can own as we separated from Lionsgate. And so ownership economics is really important because season 1s are much cheaper than seasons 5, 6, and 7. Right. And we can also put international sales back into the business, which is another way to net down the cost of a show. And so as we separate, we just announced that we opened 4 writers' rooms in the last couple of weeks on some really compelling shows that I'm excited about. As we start to move into 27, you'll start to see more of our own shows come on the slate.
I imagine, with something like Outlander, you can get people to come and pay $4 a month, which is what your special offer is right now. Can you grow that over time as you have these massive competitors like Netflix, like HBO, or do you have to hold it at a lower level?
So, one, we don't see them as competitors. We see them as complementary services. If you think about the old traditional world, Starz was always set up as a cherry on top or an additive to broad-based services. So Comcast for a long time sold Starz on top of expanded basic television. We think that world gets replicated in the digital world, and so we've always positioned ourselves as being a complementary add-on to the broad services like Netflix, like Amazon, like Hulu. And so we will always be priced well below the broad-based services so that we are viewed in the consumer's mind as complementary and not competitive.
Before we let you go, I do want to talk a little bit about your business because I believe you derive about 70% of your revenue from streaming. That leaves about 30% of your company exposed to, cord cutting. So how do you plan to deal with that over time? Is that something that you're trying to whittle down, that 30%?
Look, we really follow the consumer, right? And so as the consumer has shifted from linear to digital, we kind of followed the consumer there. But I think there's a real value in still the linear business today. What's interesting about all of our customers, 80% of all of our customers are either added on or a la carte, which means customers chose Starz. It wasn't we're in a bundle, and so that we see the cord cutting and we're just the natural evolution of cord cutting. People have actually picked Starz because the content is working. And what it also means is that we actually are a revenue generator for our partners. And so I actually think that there's a lot of opportunity still in the old traditional world for us as the content continues to roll out.
Starz Entertainment CEO Jeffrey Hirsch. They're speaking to Bloomberg's Matt Miller and Katie Greifeld. And of course, really we'll be watching very keenly where you are today, Shery, in terms of the outcome of the South Korean elections. It feels like there's optimism coming from the markets, almost regardless of the result. But tell us about sort of what you're watching most closely in terms of what's really preoccupying the minds of voters as they head to the polls today.
I mean, the markets are closed today, but really, as you mentioned, not surprising that we've seen Korean assets rally in the lead up to the vote today, because it's finally an end to 6 months of political turmoil, a leadership vacuum, and 3 acting presidents. Voters now headed to the polls until 8 p.m. local time to elect a new president. That's it from the Asia Trade. Our markets coverage continues. The China show is next. This is Bloomberg.